This webcast is for informational purposes only, and nothing should be considered the official opinion of Hashdex. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. Certain information contained herein constitutes forward-looking statements. Due to various risks and uncertainties, actual events or results in the performance of the products may be substantially different from those reflected or contemplated in such forward-looking statements. For any product-specific information, please refer to the appropriate prospectus. So with that being said, welcome. We are here today to talk about Bitcoin, and specifically the title of the webinar is Bitcoin's Big Picture, Why Its Investment Thesis is Thriving in This Current Market Environment. And we've got two great guests today, our CIO, the Hashdex CIO, Samir Kerbage. And for those of you that aren't familiar with Hashdex, we're a global crypto asset manager with offerings across Latin America, Europe, and the US. Ultimately, our goal is to give investors simple and secure access to Bitcoin and other crypto assets in the kind of emerging and rapidly evolving crypto ecosystem through regulated investment products. And our special guest today is Nik Bhatia. Nik is an adjunct professor of finance at the University of Southern California's Marshall School of Business. He's also the author of Layered Money, From Gold and Dollars to Bitcoin in Central Bank Digital Currencies. He's the founder of the Bitcoin Layer, which is a leading market research provider focused on analyzing Bitcoin through a global macro lens. So obviously with his background, and I think with the timing of the FOMC meeting today, we've got arguably the perfect guest here to talk about everything that's going on with the macro environment and how it applies to Bitcoin's investment thesis. And so I'll say up front, we'll have a conversation for about 35 minutes or so, and then we'll save 15 to 20 minutes at the end for questions. So please, if you have questions throughout this presentation, please feel free to include them at any point, and we'll reserve the time at the end to hopefully answer them. So kind of to kick things off, I'd mentioned the FOMC meeting that's happening later, and Nik had just told me he's going to be doing a live stream of their decision later on. And I think one of the things that that has happened in recent days is I think everyone had assumed a 25 basis point hike. That seems to be the case, but there was some uncertainty around that given some of the other events going on with the banking system. And so my first question for Nik is, how impactful is this decision specifically to the risk assets more broadly, but Bitcoin specifically, and then kind of less about this particular decision, but more going forward, how will the Fed's decision making impact the investment case for Bitcoin this year, and feel free to talk about even beyond that as well.
Sure. So first of all, thank you for having me. And markets are continually discounting all the facts that we have presented to us. And so in that way, I don't think today's rate hike itself is that material to the markets or Bitcoin specifically. The reason is that the market prices in what the Fed is going to do 1, 3, 6, 12 months in advance. And while the market isn't always exactly correct in predicting what the Fed is going to do, it's always taking into account all the information and making the yield curve represent what the market views is going to happen over that term. And so what you see right now with a deeply inverted yield curve, even in the very front end of the curve, and what I mean there is that you look at the spot Fed funds rate today at just below 5%, but the 2-year yield is trading at 4%, and the 10-year yield is trading at 3.5%. So that slope of 5 down to 4 down to 3.5, that negative slope, that inversion is the sign that the market is pricing in monetary policy easing, a change in the cycle, perhaps a slowdown in the economy or a recession itself. And rate cuts. So that's what the market sees. So if you take the market over the next few years and what the expectations are, and you compare it to what the Fed is saying today, likely to say today, which is that we have another 25 basis point hike for the market. We're still concerned about inflation, and we'll probably stay on hold here as we see the market digest cumulative tightening, right? They've raised rates by 5%. As of this afternoon, they will have raised rates by 5% over the last year plus. So summing up, and to answer your question here, the Fed is going to move 25 basis points, but the market is convinced that the economy is heading for a material slowdown, which will bring an easing response. So when we look at what the Fed is going to do today, it's not as much what they're going to do, it's what they are going to say. And in my analysis at the Bitcoin layer, what I've been covering in my posts and my videos is that the Fed has entered a period that is quite confusing to macro analysts, in that I believe that they should be assigning a term that they've used in the past, which is that the risks are balanced. Risks are balanced means that if we hike, it might cause some problems in the financial sector. And if we don't hike, we might have problems with inflation. And because the risks are balanced between those things, let's stay on hold here and see how things are playing out. Now, they are not introducing risks are balanced language yet anywhere enough to get them to stop today. Obviously, they think the risks are not balanced and that the risk is still toward higher inflation, hence their move today. And I genuinely disagree with where they have gotten now in the last couple hikes. Really, after the Silicon Valley, and they decided to hike again, and they're going to decide to hike again after First Republic. These last two ones for me are mistakes, but they could have easily said that the risks are balanced after the March debacle. And but also understanding that for the last year, the risks were not balanced. The risks were obviously skewed towards we need to tame inflation. And so that's why they did what they did.
That's great. I think the and kind of taking that, Samir, and thinking a bit about Bitcoin's investment case. I know you recently in one of your pieces talked about Bitcoin having a rebirth this year, not due just to kind of the macro environment of the Fed's decision making, but also with the bank failures and some of the other events that have really kind of brought to light the need for a decentralized currency with the fixed supply. So from an investor's perspective, what do you think are kind of the biggest factors that are driving Bitcoin's investment case so far this year?
Right. So first, like the investment thesis we have for Bitcoin here as Hashdex is like looking at Bitcoin as an emerging digital store of value, right? So it has characteristics that makes it a good store of value, but that's not a consensus in our society right now. So if you ask for the main, like I would say the main users of store of value assets in our society, if you ask them if Bitcoin is a good store of value, they say no, because it's not a good store of value because of multiple reasons, including, and I think especially, the volatility. But what we believe that's going to happen over the next 5 to 10 years is that a generational shift will happen in our society, and a new generation more used to having digital native assets and products will see Bitcoin as a good store of value, as a decent store of value, just like right now we see like gold or real estate. So what we believe is going to happen over the next generation is that Bitcoin will go from being like an emerging non-consensus store of value to a consolidated store of value that will eventually be part, why not, of like the central bank balance sheet. So central bank could start buying Bitcoin just like they buy gold or US treasuries. So that's what we see for the long term. And so what we track in terms of like how that investment thesis is playing out is basically, I think there are three big trends that we need to follow and see how they're evolving to understand how long that thesis will take to mature. And the first one is like the generational shift itself. It was accelerated by the pandemic, but I think we're still going on. There's still like few years until we have like a fully digital native society that has grown up in the digital environment. You have like the demand for store of value in our society, right? So how much demand we see for like a decentralized or independent store of value in our society. And the third is actually like the integration of Bitcoin and crypto in the traditional capital markets. So how like can institutional investors, for instance, access this? Like how can a central bank in the end like access crypto, in a way that is safe, that's regulated, that is like according to all the standards they're used to. So I think those three big trends are important to track, and they translate to a very optimistic scenario. So when you look at the generational shift, it's happening. Bitcoin now is in the main media outlets. Like everyone's talking about Bitcoin. You have Bitcoin prices on like Bloomberg, CNBC, all the major financial markets venues. For demand for an independent store of value, we're seeing like the geopolitical environment with like SWIFT being used as basically a weapon, like so US like weaponizing SWIFT. This movement or this trend we're seeing towards like deglobalization. So a more like multipolar world, and China ascending and like pushing countries to start trading in their own currencies. This is all like making the case that will be important in this century to have like an independent store of value that is not tied to any specific government. And on the short term, we're seeing this banking crisis in the US, like highlighting like how fragile our deposits are, especially like in the smaller banks. And this whole like discussion we're seeing now around the debt ceiling in the US, which like it's coming in the next few weeks and months, and that discussion hasn't evolved, and let's see how it's going to play out. So that gives a lot of uncertainty on the, I would say, in the most consolidated store of value in our society, which is like US treasuries, right? So the capacity of the US of paying its bills, paying its debt, and short-term treasuries are already showing the signs of that kind of stress. So I think this is very positive for this second trend of demand for a store of value in our society. Like this decade, we will need an independent store of value. And the third one on like integration to capital markets, we're seeing everywhere, like not in the US, but we're seeing this in Europe, in Latin America, in Asia. Like the regulatory environment is evolving to allow like traditional capital markets to access Bitcoin in a regulated way. And this is also very positive for adoption and for our thesis.
Great. I definitely, I'll ask you later about some of the scaling solutions that are happening with Bitcoin specifically, and how that's driving adoption as well. But before doing that, Nik, I know you wrote recently, I think it was last month, an article where you said that risk assets don't rally in response to Fed cuts; they puke, which I think is kind of a great way of saying that oftentimes, it's a credit event or economic deterioration when this happens. And so my question is, in the event that the Fed does get to the point where they're cutting rates, how does Bitcoin respond, whether that's next year or whenever they arrive at that point?
Sure. And it's a great question. And I often joke that this is the $10 trillion question. But it is true. If we knew the answer to that question, Jerry, we would be, it wouldn't be an asset class that has so many question marks and so much uncertainty, not from a market perspective, but just from an adoption perspective. Samir's talking about global adoption over the course of this century. And I agree with that completely. What he's referring to is a multi-decade adoption path for a technology whose time has come. And Now, while Samir and I could get into the nitty gritty of debt ceiling issue or even de-dollarization, which I have a different take, but I don't disagree that we are in a multipolar world and that China is ascending. I could nitpick the de-dollarization and the move toward the Chinese yuan as a currency. It's obviously something that's happening very slowly, even though we see a lot of headlines. But going back to your question, which is how do cuts affect Bitcoin going forward? What I will do here is then just do a little bit of correlation study that we've been doing at the Bitcoin layer for the last several months. Now, in 2022, mid to late 2022, you saw very strong correlations across asset classes. You saw Bitcoin correlated with the stock market, right? So when stocks were going up, Bitcoin was going up, and when stocks were going down, Bitcoin was falling as well. You had a strong correlation between yields and stocks, in that when yields were rising in the tightening monetary policy environment, stocks were falling, right? So that's the negative correlation between yields and stocks, or call it a positive correlation between bond prices and stocks. As treasury prices were falling, right, rates were going up, stocks fell too. So treasuries and stocks fell together last year. And in a way that actually made a 60-40 portfolio have one of its worst years in history. So if we have that same correlation regime in 2023, let's say end of 2023 going into cuts, what you would have in that environment is rising treasury prices, right, as yields fall. That would mean rising stock prices because stocks are enjoying lower yields, and Bitcoin would rally as stocks rally. So that is what would happen if the correlation regime of 2022 held. However, what we are seeing is a shifting correlation regime this year, as we see the yield and stock correlation flip, where now we see stocks going down with yields, right? That's the puke example that I wrote about, which is that when yields fall this time, it's probably not a good sign for stocks. It's a sign that we're in recession and things are bad. Profit margins are lower, profits are lower, and then stock prices will go down as a result of it. So if the new correlation regime holds and strengthens itself, we'll see stocks go down while yields go down. Then we bring in Bitcoin, which is your original question. And right now we actually see a falling correlation between stocks and Bitcoin, which means that what could happen, this is the super optimistic, but also backed by numbers and backed by the correlation study, what we could have is yields down, stocks down, and Bitcoin flat or even up. And that is, I would say, what we have seen throughout some of the trading weeks so far in 2023. Yields are obviously down significantly across the curve since October of last year. Stocks are flat-ish over that course, and Bitcoin is up nicely over that course of time. So it is a moving target. There's absolutely no way we can say this is what will happen if the Fed cuts. We can use these correlation studies, and the numbers that I'm using are trailing 40-day correlation. So we're looking at the last 1 to 2 months of price action.
I think this is a not completely unrelated question, but Nik, I want to kind of follow up, because I think it's impossible to fully appreciate what Bitcoin is without really understanding the history of our monetary system. And I think in your book, Layered Money, you do a really fascinating job of kind of explaining how it's essentially Bitcoin and digital currencies are a continuum of kind of monetary developments. And so what I want to ask in this, I say it's unrelated because you were talking about correlations, is like, where are we in terms of the Bitcoin being kind of a digital gold?
Yes.
Where are we in that sort of narrative, if you will?
Yeah, and it's a good question, and that's another question that there's no way to actually classify it without using the numbers. And so, one of the numbers that I like to use is the relative market value of Bitcoin and above ground gold. Now, I'm sure this is something that you guys are familiar with and is part of your study as we think about a new digital store of value. Well, what are the other store of values and how big are they? So gold market value is approximately 20 times the size of Bitcoin today. If you put Bitcoin at 500 billion and gold at 10 trillion, the Bitcoin number is a market number and the gold number is an estimate, but a fair one, I would say. So where is Bitcoin on the path to digital gold? Well, it's 5% of the market value. So that is, it's impressive, but it's still early, right? And then when you look at how is gold behaving in a banking crisis, and how does gold behave in dollar rallies or when the dollar falls versus currency versus foreign currencies? And how does Bitcoin behave? So what you're seeing during the banking crisis is that yields are falling, right? And that yield falling is a signal to the market that we might be in for the end of monetary policy tightening. And you see Bitcoin going up. But how can you know for sure that Bitcoin is rising today because yields are falling and because the Fed is done? Or Bitcoin is rising because, as Samir said, this is an alternative digital store of value. It represents an opportunity to own something that is not related to the treasury debt, to the current monetary system. And when Samir is talking about yields in the front end of the curve showing instability in that, certain yields on certain dates are rising quite a bit as nobody wants to own a treasury bill that matures in the middle of June or in the middle of July. Not that I believe that the US is in for a default, and Samir doesn't either, but now we have left the environment where we're in a where there's zero chance of a default, there's zero chance of a banking crisis, there's zero chance of the whole fiat world blowing up. We're on non-zero on all of those probabilities. And so while we can all nitpick and argue that how likely is it that the US enters some sort of debt crisis from the treasury perspective, I don't think so. Other people might think so, but both of those sides are identifying Bitcoin as an alternative. And in that non-zero chance that something can happen, Bitcoin is something that doesn't have a counterparty, doesn't have a center, right? And that's the way that we think about it. So how does Bitcoin behave in cuts? And how does Bitcoin relate to gold? It's a moving target, but the fact that Bitcoin does stand alone in its properties is sending it that direction. And another thing people disagree about or nitpick is how long is this Bitcoin adoption story going to take? 5 years ago, 7 years ago, when I'm getting into this space, I heard people saying in 5 years, the dollar will cease to exist. Of course, and you hear the same thing today going into banking crisis that in 5 years, this will, I don't believe that. I think that we're in for a multi-decade adoption path. And I actually think that other currencies are in the crossfire here, not necessarily the dollar. It's smaller currencies that will have to compete with Bitcoin and the dollar at the same time and won't be able to survive. That's my opinion.
Yeah, and I think we at Hashdex we're very big proponents of long-term investing in this space, and I think there are certainly cycles that we've seen with Bitcoin, and I do want to talk a little bit, Samir, about kind of price. There was a interesting analysis done by Bloomberg earlier this week that had noted that so Bitcoin has had a positive return this year for 4 consecutive months, and historically in the last 10 years, when that's happened, it's led to significant outperformance over the course of the next year. So with regards to price and kind of, the next Bitcoin bull run, what do you see as the potential catalysts for that? I know we have the halving coming up next year is one. So I'd be interested in kind of hearing your perspective on that and other catalysts that may spark another significant price appreciation.
It's for me?
For you, yeah. Sorry.
Listen, I think we are in uncharted territory in terms of like everything that is happening globally, not only like in the macro environment, like geopolitical trends. So it's very hard to do any prediction based on the past. So any like analysis you do based on like number of months they've been positive or cycles, it's really dependent on really what's going to happen like in the macro scenario. Seeing like a scenario that is dominated by macro, like everyone is reading the Fed minutes and looking for words to think about what investment decisions they're going to make in multiple asset classes, not only Bitcoin. So it's very hard to predict, but when you look at the history, you see that Bitcoin has been trading in 4-year cycles. And we believe that this like it is exactly 4 years because of the halving cycle. Also, like it gives like a trend, and remember, like Bitcoin being a store of value, Bitcoin is basically a belief system. Like you either believe that Bitcoin can be a good store of value or you don't believe. There's no alternative. There's no middle ground. So that's why for some people they live in this like Bitcoin maximalist paradigm where Bitcoin is going to replace all currencies and the US dollars, and other people just think that Bitcoin is worth zero. The middle ground, it's very hard to be rational and be on the middle ground. So that's why Bitcoin trades between like extreme fear and greed all the time. So all the patterns you see like on Bitcoin is either like Bitcoin is worth zero or Bitcoin worth like $1 million next week or in the coming 2 months. There's so extreme emotions around like Bitcoin. And the fact that Bitcoin trading currently is mostly dominated by retail investors makes it very dependent on, I would say, like very different kinds of emotional bias and behavioral biases. So that's why we believe that those 4-year trends, they tend to continue in the future. And I wrote about this recently in February. I believe we are in a recovery phase of like the Bitcoin cycle. So we're starting to be more optimistic. Believe that the worst has passed already in terms of the cycle, and we're very like positive for the coming months and years. Probably like we're going to see like Bitcoin reaching its all-time high in the next like 12 to 18 months. It's not like will not be a surprise if that happens. But like all those things we're talking about can accelerate or even slow down its path to adoption and its price trajectory. So I think those are I mentioned the events we need to be like looking into and checking out, like generational shift in our society. That's a multi-decade trend. That's not going to happen in 1 or 2 years. Some events can accelerate that. Like I said, COVID accelerated the digital transformation of our society, but we hope there's no other pandemic in the short term, right? So it's a really like a multi-decade trend. Demand for a store of value, like every time we see like those kinds of crises, and we see like this deglobalization happen, it increases like the demand for an independent store of value and integration to market. So, for instance, like an ETF being approved in the US would be a huge catalyst for price because that would allow like institutional investors to access this asset in a way that they are used to, I would say, in terms of their regulation and their structure. So it would be easier for them to adopt Bitcoin in a regulated wrapper. So I think those are the trends we've been following, and we are very optimistic about the evolution of those trends in the coming months.
Let me ask a follow-up question too about just investor demand. I know we've seen more interest in our Bitcoin futures ETF here in the US, and I suspect it's not just due to the price appreciation. And knowing that, I think I saw a stat the other day that the current confidence in the financial system is lower than it was during the great financial crisis. So are there factors, the lack of maybe confidence in the banking system and monetary policy? Samir, are we seeing from investors more interest in kind of demand for Bitcoin as a result, or at least a greater appreciation for it?
Yeah, I think for two reasons. Like, first is like, of course, the price action. So it's helping. So remember back in November, during the FTX crisis and everything, like the narrative was Bitcoin is over and crypto is over. Like, so now like Bitcoin has recovered a little bit, and people are starting to ask, is this the right timing? Like, should I, instead of like just this is toxic waste, I want to be as far as this as possible. So people are starting to consider again, and I think they're also understanding better this thesis of like an emerging store of wealth, which means that it makes sense, to have a very small allocation to this. Just like, this is another analogy that I like to put out on Bitcoin is just like, imagine if Bitcoin is a gold startup. It's a new kind of store of value, but it's still a startup, still too early, right? So it's a kind of like a venture investing nowadays. So people are starting to see this as an attractive investment for, I'll say, 18 months horizon. And also by the reasons that Nik mentioned, like there are non-zero probabilities that we will have a scenario where Bitcoin could be outperforming and could be even like performing positive while equities and bonds are negative. So like it's just doesn't make sense to not consider Bitcoin like a small Bitcoin allocation at this point in time.
I want to maybe shift a little bit to talk more about some of the negatives, or at least the potential threats. And Nik, I think this would be a good question for you, but Samir, feel free to jump in as well. Nik, do you see, or what do you see as kind of major threats to Bitcoin, whether it's central bank digital currencies, mining bans, all the things that we're reading about in the news? Do you have a kind of a list of things that could disrupt the investment case for Bitcoin?
Sure. And I think because Bitcoin is decentralized and doesn't have a central point of failure, that it does make Bitcoin more resilient. And it does. So two things that you mentioned, central bank digital currencies and mining bans. I don't think either of these things present a challenge to Bitcoin, because central bank digital currency is simply an evolution of government cash and not anything that different. Tracking digital payments using the traditional system is also nothing different, as we know that the FBI, et cetera, have access to Visa and MasterCard networks. And so there's nothing that new from that perspective. Now there is a control, there's a control infrastructure that would come along with the CBDC, but I don't think that rolling out a Fed coin presents an adoption challenge to Bitcoin, as those that buy Bitcoin understand that they are buying a currency that's not issued by the government themselves. So I don't think CBDC from any country really presents a challenge. Mining bans as well. We see that when China banned mining recently, we saw a huge drop in the hash rate. But within several months, the hash rate had completely recovered and is now trading at levels that are multiples higher. I think we're somewhere in the 1.5 to 2 times on the hash rate. Samir's nodding his head, so I know I'm in the correct range here. I think we were in the 2 handle, and now we're closing in on the 5 handle in terms of the amount of exaterahash going on across the network. So there was a huge response in the initial days and weeks of that, but it recovered because Bitcoin is resilient. And now bring it back to the United States. Let's say we get mining bans. Do you honestly think that the mining ban is going to come from the federal level? There's no way that is something that happens in a near time horizon. But could we see mining bans at a local level? Absolutely, yes. Right? Local politicians, local governments, whether it's local, municipal, state, we might see, and we have, you can't have a Bitcoin miner on. It's affecting the grid in a negative way, and we are not going to allow that. So what happens when a municipality bans Bitcoin mining? They unplug the machines and take them to the next county. And that type of activity happened in China. It will continue to happen. So mining bans are another thing that I don't think present a challenge. So what does present a challenge to Bitcoin? I think that the regulatory environment in the United States does present a challenge, as we are trying to get to a point where Bitcoin businesses that are domiciled in the US and have US customers are able to operate without an undue tax burden and without regulatory uncertainty that they're going to get shut down from the federal level. Now, that is a battle that, to be very honest, could take decades to play out on the federal scene. It could also take a decade or more for the CBDC to play out on the federal scene, ex-crisis. So my prediction now is that in a potential banking crisis, recession, fiscal stimulus sometime in the next 2 years or so, that they might try to sneak in a CBDC into the legislation in that emergency. But to get both parties to come together in a non-emergency to pass a CBDC seems very far-fetched to me. With the split Congress that we have today, contested election next year, contested elections in the House and the Senate, seeing that sort of ban against Bitcoin, introduction of CBDC at the federal level, they all seem far-fetched to me. What I do think we'll have is more stablecoin regulation, which is banking regulation. I mean, those are securities and security regulation. So I think that the SEC and CFTC, et cetera, will expand their mandates to cover some of these digital assets and products as we go forward. But yes, the federal government and potential sentences that make it into proposed legislation can present a challenge to American businesses building Bitcoin products. I still don't think that affects the Bitcoin adoption heading to 1 billion people over the coming decade plus, which is my core thesis here. But when you really want to assign what are the main challenges, I would say that the words in the legislation proposals themselves can affect Bitcoin businesses in the U.S.
That's actually a good segue in terms of Bitcoin reaching 1 billion users, over the next decade or so. I mentioned earlier, Samir, some of the developments that have been going on with Bitcoin in terms of scaling and helping with adoption. Do you maybe want to talk a little bit about some of the work that's gone on there with regards to the Lightning Network and some of the scalability solutions we're seeing?
Yeah, so I think that work is being done, and I think that's the kind of like the infrastructure evolution we need in order for Bitcoin to be more used on a day-to-day transactions, right? So Bitcoin it's good and it's very solid for larger transactions. It's very efficient for like transaction finality, but it's nothing like like a credit card or like an instant payment for retail. You cannot pay like for a coffee using Bitcoin. And I think those evolutions in a second layer on a Lightning Network, they allow people to actually use Bitcoin for payments, which can help the adoption curve because people could use it on day-to-day transactions, and could help like even like for the retail investors to also use Bitcoin as a potential store of value because it's easier to transact, so increase the currency velocity. So that's happening. Like Lightning Network has been evolving and has been gaining traction. We're also seeing like new solutions on top of Bitcoins, like even NFTs, you know, like, and there's even a thesis like for people that are more bullish about Bitcoin and the capacity of Bitcoin to incorporate the innovations we're seeing on the whole blockchain space. They argue that will be possible to do like anything you could do like on Ethereum or any other like smart contract network you could do on the Bitcoin network eventually in the future. It's just that those smaller networks, it's easier to innovate and to change, so they can experiment faster. And then once like experiment is well consolidated and is working fine and it's battle tested in a smaller network, then you can eventually migrate and create a solution on top of Bitcoin, which is like an interesting way to see like Bitcoin could be the foundation of like an internet-based financial system. And but those are very experimental. Yeah, to still like have a lot of years ahead in terms of R&D to deploy those like smart contract capabilities on top of Bitcoin. But certainly it's an interesting trend, and I think it's kind of like independent from the store of value, I would say, thesis to play out. The first thing we need for Bitcoin to be used as a currency or be used for payments is that it becomes a consolidated store of value. So its volatility needs to go down in order for people to actually use it as a unit of account or even as a means for payment. So that's I think the first stage of Bitcoin adoption is to have it consolidated as a store of value, volatility going down, and then you start seeing like this infrastructure that is being built will actually be used for payments. But again, this is a multi-decade trend.
I want to just come. Yeah, sorry. I want to come in with one thing. What you're talking about with that adoption path and with the volatility. Look at Argentina. Look at what happens in crisis. Not just Argentina, but generally like in March and April here, we have banking crises happening. We have sovereign crises happening as well. What actually physically happened in 2023 when we hit some serious systemic problems in the US and the US banks, and then banks that have US dollar funding needs? What happened? Did they rush to the Chinese yuan for yuan liquidity? Did they rush to restart or drum up a Bitcoin infrastructure overnight? No, none of that. They went to the dollar emergency programs. They went to the Fed emergency swap line. And what did Argentina do when it was facing a currency crisis? It had to actually protect the dollars that it had so as to not run out of dollars. It didn't go into hyper Bitcoinization or go into this relationship that, you know, there was a headline that Argentina is going to start buying Chinese commodities in Chinese yuan because they didn't want to spend the dollars. They didn't want to relinquish the dollars. So we're still in an environment where the dollar is king. And for Bitcoin to come in today in the crisis, it never happens because Bitcoin can't just step in a crisis on day one. And that's what Samir is talking about. It's the infrastructure. And the infrastructure gets built through the bull markets and through the bear markets. And then it'll be there one day for the gradual. And then when you have a crisis, then it can accelerate and the Bitcoin adoption can go from 10 to 50%, or, you know, the infrastructure usage in terms of using Bitcoin's blockchain instead of traditional Swift can go from 3% to 10%. But when you're at zero or you're near zero and you don't have the infrastructure, it's almost impossible to envision the day one Bitcoin answer to the problem. But I think we're all in this industry because we identify what Bitcoin can do over the long term, and we're all building Bitcoin product solution education platforms to drive that shift.
Yeah, and one of the things I know, Samir, you've talked a lot about is kind of drawing a parallel between internet adoption and Bitcoin and crypto adoption now, and the need for, as you mentioned, the infrastructure, but also the generational shift. And actually, this question is for you, Nik, because I know you teach a class, I think Bitcoin focused class at USC, and it's very easy, obviously, for Charlie Munger, Warren Buffett to dismiss Bitcoin, but from what I understand, especially with kind of the college age students and people that are more digitally native, this is a much more intuitive technology than a lot of us really appreciate. And I'd be curious in your perspective from conversations with your students about their sort of understanding of what Bitcoin is, what having like a global digital currency means, and then what that might mean for adoption, longer term.
Sure. So imagine a debate with Charlie Munger, or imagine a debate with somebody. I don't even want to say that age is an issue here. Just imagine an argument with somebody that is anti-Bitcoin or doesn't believe in Bitcoin's adoption or its use case. Okay. And so I imagine myself sitting in the debate, and I would ask, the other person, can you articulate to me, or can you explain to me why the Bitcoin mining process is bad for generating a decentralized asset? Or try to get the other person to explain what is going on with difficulty hashing and the blockchain, right? The Byzantine generals problem, the solution that Bitcoin provided, in that it's the first time ever we can coordinate a truth in a decentralized digital way. That's the solution of Bitcoin. And so let me talk about my students, then I'll come back to Charlie Munger. When I teach my students, and now I'm debating whether or not to teach layered money before or after Bitcoin mining. But I actually started the course with Bitcoin mining. And I started the course with explaining the key terms of blocks, chain, hashing, difficulty, targets, nonces, and everything to do with how the mechanics of adding blocks to the Bitcoin blockchain works. When you set that fundamental base for the students or for anybody, the critiques of Bitcoin start to evolve. And then I see my students talk about, well, now let's talk about the speed. Why is it slow? Why is it 10 minutes? Then we can bring in Lightning Network. But you see that conversation, it becomes it's advanced, in that one person is coming in with the knowledge set of how the thing works before starting to critique it. And so for me, when I'm teaching the students, it's not necessarily that they're young and that they're open-minded and that they all have had cell phones since they were born. It's that I am making the effort to explain the blockchain, the chain of blocks, and what the innovation was. And it takes time to understand the innovation. And once you understand that, we can move on and we can have a debate. But I think that if you ask Charlie Munger to define the word nonce, you would get a blank stare. And I use the word nonce for a specific reason, because it's a word that's not used commonly when we're talking about Bitcoin. We all know what Bitcoin mining is, or we think we know what it is. But when you get down into the nitty gritty, a nonce is the number only used once by a Bitcoin miner when they're changing. Remember, the analogy that it takes trillions of guesses. Well, it's actually trillions of different nonces that you're putting in to your mining algorithm to try to win the block. And so I use the word nonce at the beginning of my class because I know the students have never heard that word. And I know they don't know what it means. And I also know that with 2 to 3 hours of lecture over the course of 1 to 2 to 3 classes, they will know what nonce means, and they'll be able to have a grasp on what Bitcoin is, because I haven't just explained nonce in 10 seconds, but I've explained it in 3 hours using 10 to 20 other key Bitcoin mining terms to give them context to all that. So I joke around with my students. I write the word nonce on the board. I said, if you don't understand this word here, you have no shot at understanding the rest of this course. So let's spend the next few hours, the next few classes, understanding this word and all that goes along with it, and then we can proceed. So the answer to your question is I'd ask Charlie Munger to define the word nonce for me. I would get a blank stare, and I would know that the conversation isn't a two-way conversation. There's lots of critiques of Bitcoin, and there's lots to debate, but just claiming that it is a rat poison isn't enough for 8 billion people and all the educated people, not even just educated people that understand Bitcoin, but people that are willing to learn, people that are willing to find out what is this new thing.
I think Nik is pointing out to the point to an information asymmetry.
That's right.
Towards like generations, and also like people that have the, I would say, the intellectual curiosity to really understand how this thing works and how it, what are the implications of that nonce and those technical terms. That's a huge information asymmetry. So you have people that understand this and actually understand the implications, and they are bullish about this. They believe Bitcoin can be a good store of value. And people that don't understand those implications or didn't like have time to go further, they simply don't believe, because it's hard. Like if you don't understand what nonce is, then maybe it's harder to understand the thesis. I normally joke here internally that it took me probably, I'm a computer engineer, so like I read the Bitcoin white paper back in 2011, I understood it and thought it was a good experiment, but it took me 5 years to understand the implications of that innovation. And I normally joke here that my job here is to reduce that cycle in people. Like if I can get people to understand the implications of Bitcoin and blockchain in less than 5 years, I think we'll be doing a good mission here.
That's a great place to shift to some questions, and we do have a handful that have come in. The first one is actually related to this discussion that we're having, and I'll read it verbatim because it's well articulated. But the question is: we see in the U.S. a push by Senator Warren and others labeling the entire asset class a Ponzi scheme. TV shows bringing on actors who say the same. Do we think Bitcoin and crypto is under threat due to cultural pushes against it? And will U.S. adoption be slowed by these factors? I don't know, Samir, if you want to take that first, and Nik, I'm sure you have thoughts as well.
I think it's unfortunate that a technology or a tool has become a political topic in a very polarized society like the US right now. So if it comes to that, if if like Bitcoin is a matter of politics, either you're with it or against it, then it's very hard to advance the agenda, and to be really talk about the technology. But I don't think that would necessarily push against it, because on the other side you have a lot of people supporting it. So it's just like one new subject that's going to be polarized in the US. But I think the fact that people are discussing this will help adoption, will help people understand the implications of Bitcoin. So I think I see there's even a positive note about like having people really against this, and I think you raise awareness and people will start looking for what is the truth here.
Yeah, the hypocrisy just from politicians on both sides of the aisle can make anyone's brain hurt. And so I think that, if you strip out the hypocrisy of, Warren flying around on private jets, and you can strip out the hypocrisy and then just come down to media, political divide, and all that. In the United States, if you have Senator Warren and some of her colleagues going around and labeling Bitcoin as a Ponzi scheme, actors going and labeling it as a Ponzi scheme, do you really think that the other 50% of the country that despises Warren is going to actually take some of those things at face value, or actually probably go the other way? So in America, we have an insane cultural divide and political divide. I know it burdens most Americans actually to think about how divided people are, and Washington itself is, because I think that even though people might have political discourse, it isn't as divided as the media and politicians make it seem to be. Now, you're asking about the cultural pushes against it. You will have those, but you have the cultural pushes for it. And there's nothing to stop that battle. And the cultural battle over, listen, we have so many cultural battles going on that are somewhat political, but it's hard to separate. Is it cultural? Is it political? In terms of the debates going on in the United States. But I'm of the view that we have, hundreds of major municipalities in 50 states. We have a bunch of different areas where law can be mandated. And in that way, Bitcoin will find freedom and cultural support as many or as more places as it finds cultural pushback and bans. And so Bitcoin will survive and thrive in that environment, just as anything else in the United States does that has, like, guns. I don't want to get into the debate about guns, but guns are banned in some states and allowed in other states. And we have to think about Bitcoin in that sort of way, where it might be legislated one way some places, other way, and you might have political fights about it that will last for decades. How long has the battle over the Second Amendment been going on? And so don't just assume that a cultural pushback or Hollywood getting anti-Bitcoin and labeling it is going to do anything. As it is, most people look at media propaganda and realize that the opposite is probably true. So I would just have some of those considerations.
I think that's probably a perfect place to stop. Apologies. I know that we had a handful of other questions. A lot of them had to do with things we discussed, and I know you both have a hard stop here in a few minutes. So I just wanted to say thank you, Nik, in particular, for joining us. And a couple quick housekeeping items. We are next week going to be hosting a Twitter Spaces with Michael Saylor on Monday at 2 p.m. Eastern. So I'm putting in the chat here the save the date for that. So anyone listening, hope you can join us there. And yeah, and then for Nik, I know, and people can reach you at layeredmoney.com, thebitcoinlayer.com as well. And Samir, as always, thanks for your insights. And yeah, I'm sure we'll be talking about this topic very soon again. So thanks, everyone.